a big step. You had 2 million as your first fund, 20 million as your second, now 50 million is your third. Congratulations, and let me know how it changes. The size of fund, does that change your investment strategy?
Yeah, so when we raised our $20 million fund, we had some specific theses around kind of what kind of companies we invest in and what our check size would be. And over that fund, that changed slightly. And so, when we went out to raise this time, we said we think $50 million is the right amount because we do pre-seed and seed stage hardware companies and software that relates to hardware. So one, we can pro-rata a little bit more, so kind of keep doubling down on our winners. But also, there's a lot of companies that may just need a slightly bigger check to start. So with this fund, we can lead or co-lead like rounds between $500,000 and $3 million in size.
How much do you keep aside for follow-on rounds? How hard is that to navigate as a story for things?
It really depends on the type of companies, but typically you're reserving like 2 or 3 to 1 for every dollar you invest.
And you've got, what is it, 40 or so in your portfolio now?
Yeah, so we just did our 39th investment. We've got a couple of ones that we're looking at right now, and they've gone on to raise about $300 million. And what's interesting is to see kind of how they've grown, very similar to a lot of their software counterparts.
Talk to me about the exit strategies, though, because you've had 2 significant exits, but 2 out of 39. When does the pace start to pick up? Does it? Is it in for the long haul? Explain the outlook.
I think all venture is in for the long haul. When you talk to Series A firms, when they invest, they don't expect to really exit for 5 to 7 years after that. And what we're seeing is that we're 5.5 years old as a firm, so we've got some companies that are doing really well. But if you want those those big winners, those unicorns, those billion-dollar exits, it just takes a little bit of time.
How hot, how competitive is it out there as a seed VC right now, particularly in hardware? Is everyone trying to muscle in on the earlier and earlier stages?
We find it to be pretty competitive, but for us, that's why we're verticalized. And also, what makes us really different is that we really embed with our companies. So we only want to do 5 to 8 deals a year. And there's 3 partners, and we really dig in with them because when you're just starting that hardware company, there's so much that can go wrong. But also, for all types of startups, we think having people who've been around the block at that table with you greatly increases your chance of success.
Talk to me about those verticals that you're in. Where's hot that you're really looking to
So one area we're super excited about is robotics. And you're seeing kind of this overall macro trend getting driven by things like self-driving cars, but also things like industrial IoT, consumer electronics. And then with this fund, we call them applied sensor companies, but software as it relates to hardware. So we were looking at a company that's doing computer vision related to robotics. And we think a lot of those companies can scale really effectively.
So robotics is hot. Where isn't hot? Because I feel like I've just, for the beginning of this week, we've been talking about GoPro at record lows when it comes to its share price. Fitbit fell out of favor of the Christmas period. How do you ensure that the companies you're getting into, I'm sure some of them might be consumer facing, but some of them aren't, how do they not be faddy?
So it really is about good long-term business models. I think on the consumer side, it's a great question to ask, what could have Dropcam been? When they announced their Series C, they had a 42% attach rate for their recurring revenue service. That's basically all margin. So if that company was around today, or if GoPro or Fitbit had a bigger recurring revenue, they'd be great. But I'd also say that these are both $1.5 billion public companies. And the reason they were even able to go public is because they're hardware. That real revenue that the market can actually evaluate lets them go public, gives everyone liquidity, and I think those are still great companies.
So when you're looking at the market space, are you finding it's more B2B hardware that you're looking at right now?
So about 75% of our deals are B2B in some sense. I think that, and this is true in venture in general, if you look at the consumer web, there tends to be fewer bigger winners. So you have Facebook, but on hardware you have Apple. So when you can really do hardware, consumer hardware right, they can be gigantic successes. But the bread and butter, I think, is really going to be these B2B or industrial companies.
The intricate workings of your portfolio companies. Have you got many immigrants? Are you worried about some of your companies when we have the administration changing the rules of the game to a certain extent?
We definitely have a number of immigrants in our portfolio, and for us, we're big supporters of the H-1B and also just kind of startup visa. So a lot of people come to the United States, get masters, graduates, undergrads, and then they have to go back home. And so the founders in our portfolio that are immigrants, it's like they work hard, they're thrilled to be here. And I actually grew up down in Long Beach, which we have tons of Cambodians and Vietnamese immigrants. And so for us, we think it's a real tragedy to kind of really shut the door.